Politicians have shut down the U.S. government. Is IPO volume shut down too? Which aspiring startups are in limbo, and who's likely to push their IPOs to 2026? In IPO Radar news, Cerebras resurfaces, Kraken sees an opportunity, and Fervo Energy turns up the IPO heat. Welcome to the Axios IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of Axios IPOs. Startups are already staying private longer, and the SEC process to file to go public is already cumbersome. Leave it to politicians to make things worse. This is the second time this year that government actions and policies and statements have shut down the IPO pipeline. If you remember back to April, the president announced the new tariff policies, and several companies that had already filed for an IPO decided to freeze and back off their IPO ambitions until there was more clarity in the markets. No wonder private companies are staying private. This isn't a political show, but I support any policy or government action that helps to smooth the skids or make it easier for companies to go public. We want to see more public companies so it's easier for retail investors to own stock for the long term in these companies, or to own the stocks indirectly through their 401ks or index funds or IRAs. And the SEC process of filing for an IPO and then the quarterly filing process for public companies is what maintains confidence in our markets. Reasonable oversight and a stable government is all we really ask for these private companies who have ambitions to be public companies, is this stable government and reasonable regulations that aren't too overbearing. And ordinary investors like you and me can be confident that over the long term, our investing into public American companies is going to be a long-term benefit to our wealth. Unfortunately, the government is getting in the way of this IPO process right now. On October 1st, I'm sure you've heard that the government shut down at 12:01 a.m. due to whatever problem they have with each other. I don't care what it is. When the government can't operate, it just reflects badly on the competence of those people who are in office. Doesn't matter which side of the aisle you're on or which side of the aisle they're on, the government has a job, and they're not doing it. I live just south of Washington, D.C. in the northern Virginia suburbs, and this shutdown impacts a lot of my neighbors, a lot of my former colleagues, and just people that I know. And I've lived through several of these on my own. I was a federal contractor for about 20 years, and anytime one of these shutdowns loomed, government workers start to get nervous, contractors get nervous because they know they may start losing their paycheck eventually. Then all of the federal workers and anybody who's in charge has to spend all this time preparing for the shutdown, which is work that they're doing instead of what they should be doing, and then wait for politicians to do whatever they're going to do. And then eventually they come back into the office and start working again. The government workers always get paid. They may not get paid on time, but they always get paid because that's what the law is. Contractors, like I was, on the other hand, had to work at risk. That means the companies who have the contracts would ask their workers to make sure that their workers were working and getting paid, but those companies weren't always clear that they were going to get paid for the hours worked, that they were working at risk. So I went through this several times, and back in 2018, 2019, it was like a 35-day shutdown, and it was toward the end of the year, so things weren't as busy. But there's this separation of people who are essential and people who are not essential. And when I was working on IT, there was a group of people who run the computers and fix the bugs and make sure that the systems are up to make sure that the federal government could collect taxes. I worked for the IRS. And those computer systems have to work whether the government is working or whether the politicians are in Washington or not. And so those are people who are essential, and there's all kinds of essential people around the government, and a lot of those are going to be still working. I think I saw something like 750,000 workers could potentially be furloughed. They're talking about layoffs, and that's going to really disrupt this economy. I realized that morning, Wednesday morning, that this was going to impact the IPO markets as well. The government always comes back. They always find a solution. It's just a matter of how long it's going to take. Now, there's a lot of money and time wasted preparing for the shutdown. While things are shut down, nobody's productive. Nothing gets done except for those essential workers. And there's a lot of essential workers, so it's not like everyone's just not working for the government. And then the longer it lasts, the more pressure is on Congress to fix it and to open the government back up. So the government is going to figure this out and come back online. And for us as IPO investors and people watching the venture capital markets and IPO pipeline, the big question is, how long is this going to last? And if it lasts more than a week or two, I think you can kiss 2025 goodbye. There's only so much tolerance that an underwriter, that an issuer can have for this government uncertainty. And even when the government reopens, they might just kick the can down the road a few weeks. So they may come back on Friday and say, oh, we've got a deal. We're going to open the government for a week and then it's going to shut down again. So this uncertainty just doesn't work with companies that want to IPO or the underwriters who are advising these companies. The SEC plays a critical role in the IPO process. These companies, they submit their filings and they receive feedback from SEC workers. If those workers aren't working, they can't provide the feedback and the IPO is going to be stalled. That's what we're seeing right now. So unless this shutdown lasts a few days, maybe a week, maybe 2 weeks at the absolute most, unless we see some sort of breakthrough, we can just forget about IPOs for 2025. Everyone's going to push to 2026. And they may not even be confident that things are going to work out in 2026. And there may be a race against the market. If the market starts to be impacted by the government shutdown, sometimes it could take market uncertainty or a market event to actually trigger the government to make a decision. Back in 2007, 2008, the market was tanking, government acted. Back in April of this year even, when the tariff announcements were happening, the bond markets started to react. And when that bond market started to crack a little bit or show impact from these political decisions that were being made, we saw some reversals of some of the language that was being used in the context of tariffs. So a short shutdown, a week or less, maybe 10 days, then we might walk away from this unharmed. We'll push the IPOs through that have already filed, and we might get someone filing later in the year. But unless there's very clear path forward within the next 10 days or so, we're just not going to see it. Of course, there's a lot of blame going back and forth from these politicians. Blaming one another doesn't fix the problem. You got to just fix the problem, which means getting adults in the room and coming up with a solution. Private companies do this all the time without shutting down. They meet in rooms, they cancel out disagreements and move forward. So unless we see that soon, we can forget about IPOs for 2025. And it's really disappointing because this is the second time we've seen this in 2025. And the pipeline was improving and we had some really exciting deals coming through. So maybe 2026 is lining up to be a banner year. But that's all dependent on market conditions, and the market's at all-time highs. There's a lot of talk of frothiness and nervousness that the market's overvalued, at least in the large cap space. The broader market needs to continue to hold stable or grow, or else 2026 isn't going to work either for IPOs, and we're just going to kick the can down the road. On this podcast, we want more IPOs, we want more opportunities to invest in IPOs, and we want more public companies so that we can participate in the growth of the U.S. economy and the growth of strong founders and great teams who are innovating and growing revenue and displacing the old guard and making money out there. And we want to participate in that. That's capitalism. And the best way to do that is through the stock market. The IPO process is not perfect by any means, but it is regulated, it's structured, and people have faith in that process. So let's get things figured out so that companies can move forward with their ambitions to become public companies. The reason I'm pretty pessimistic right now is that we had a fairly narrow window to begin with. If a company wanted to go public this year, if a company still wants to go public this year, they really need to file their S1 by November 15th at the latest. So if you've got a couple weeks here where there's some uncertainty, you can forget about it. Those companies are just not going to move forward. If the SEC isn't working, there's no one there to qualify these filings. There's no one to give feedback on them. But I'm still seeing some filings hit the feed. I think public companies can still file, and there must be some essential workers behind that. But issuing new shares in an IPO or a secondary, that's a bigger issue. That's a more important function that the SEC has to play, or a more critical function, instead of just maintaining what's out there. With the shutdown, there are companies who have filed for an IPO and they're in limbo right now. The ones that we're following, Navan, that was last week's topic, focused on the Navan IPO. That's a travel and expense SaaS. Wealthfront filed last week, and it was going to be the topic of this show until the shutdown happened. It's a fintech, it's profitable, it's a brokerage, a robo-advisor. I guess their bankers maybe had more faith in politicians to break the stalemate, so it's now in limbo. Beta Technologies is another one that filed last week. That's a company that I reported on in the IPO Radar segment last week. That's a electric aircraft company, vertical takeoff and landing kind of thing. There's another one called Once Upon a Farm. That's Jennifer Gardner, the Alias actress, has a food business she's a partner in or a founder in. They filed to IPO. And then the University of Phoenix is another one. They actually had set their terms to file, and it's out there on Robinhood and Fidelity to invest in it. And we don't know what's going to happen to that one. If it's already kicked off its roadshow. But according to an Axios report I read, that even during the roadshow, the SEC is still providing feedback to these filings. Alliance Laundry, the largest commercial laundry machine maker in the US, they have filed as well. And it's unclear if these two are going to make it out the door or not. Now, Fervo Energy, which we also highlighted last week, that one made it out the door. In fact, it did quite well. It was up 50-70% after its IPO. That was the one with no revenue, building a giant AI energy farm in Texas. They IPO'd on October 1st, the first day of the shutdown. But since they had already priced their deal the night before, they were able to move forward. The NASDAQ and NYSE are not government run. So those were the Limbo companies. There's a couple more, we'll call them kick the can down the road type of companies that maybe were thinking about going public in 2025, and now they're probably thinking that's not going to happen. The one that I've been most excited about is going to be a $50 billion IPO. They're going to raise $4 to $5 billion. That's Medline. Medline is a supply chain company for health and medical equipment. They apparently had a meeting with their board a week or two ago, and it was reported in the FT that they were making a go, no-go decision. And then a couple days later, Bloomberg came out with a report that said they could file for an IPO as early as October. And it's October now. And if you're a banker advising Medline, are you telling them to move forward and file that IPO into a system where nobody's going to be able to look at that filing? Now, we don't know what is going on at the SEC, who's been essential or what. It's possible they did a lot of work before the shutdown, and they might be able to release some of these filings. We don't know. I'll still be monitoring the S1 filing on my website and monitoring the SEC for news and for public releases, but I'm not very optimistic. And I think if you're a banker, if you're an issuer, you're going to pull the plug on that IPO and say, let's wait until there's a solution to this government impasse. Now, there's also a handful of companies that have already kicked the can down the road and are already planning to go in 2026. Now, they're all pending market conditions. They will all tell you that. So if the market remains stable, ideally growing or not falling too much, then these companies will also likely go public, and they're going to be on our upcoming IPOs list for 2026. Those include Kraken and Discord. We were really hoping Discord was going to be a 2025. From what I'm hearing, and certainly with the news of the government, it's probably going to be pushed to 2026. Cohesity is cybersecurity. They've talked about a 2026 IPO. Certainly not going to be 2025. Strava, the running app. Lambda is an AI infrastructure play. They're talking about 2026. And then Cerebras, which I'll touch on in the IPO Radar segment today. It's not looking like it's going to go forward in 2025, but it could be a 2026 candidate. And perhaps one of the worst outcomes of this is these companies are all very comfortable being private. And so if they're going to pause their IPOs or have more time to think through it, maybe they're going to get an acquisition offer. Maybe they're going to get more convincing overtures from these SPAC companies who have these skeleton public companies out there looking to do reverse mergers. A lot of times those reverse mergers are with lower quality companies that aren't quite ready to IPO on their own, and they want to take the shortcut into the SPAC. So they're going to get overtures from those guys, or maybe they're going to need the money sooner and say, let's just raise another private round because we need money today and we were going to get it from that IPO. But now that we can't IPO, we got to get it from somewhere. And it's either we're going to borrow it or raise it from equity investors in the private market. And so this shutdown, this pause pushes everything off. We think back to the IPO freeze, which started on April 2nd. Klarna and StubHub had just filed, and it took them until September of this year to file and to get their IPO out the door. Now remember, there was that wave of companies that dropped their terms or IPO terms just after Labor Day. And maybe they were the ones whose bankers and advisors were telling them, hey, you better get this in quickly because this government's going to shut down at the end of the month. And maybe they were the ones that were advised correctly because they did get them out the door. And even though it was crowded there at the beginning of the month, they got the job done. StubHub, disappointing. Klarna, disappointing. But they got the job done. They got out the door, finally fulfilling their long-term ambitions to become public companies. I learned a few things about this topic from Dan Primack at Axios. I'm going to put a link to his article that came out on September 30th talking about the implications of the shutdown on the IPO markets. I think he went on CNBC as well to talk about it. None of my neighbors work for the SEC. They work for a lot of the other government agencies around here, so I don't have anyone of my neighbors to talk to about this. I was hoping I would, but I'm not sure there's a lot to talk about because if this government shutdown lasts more than a week, 10 days, 2 weeks max, you can just forget about the 2025 IPO revival. It's over. We're going to have to put our sights on 2026 and the private markets because there's a lot of activity happening in venture capital and there's a lot of liquidity in the private markets as well. And so just because there's no IPOs doesn't mean you can't invest in these innovative startups. And maybe I'll be highlighting more of those stories in the coming weeks if indeed this IPO volume is just completely stopped. Let's move on to IPO Radar news. I cover about 150 to 200 of these IPO Radar companies, and these are companies I've identified as potential IPO candidates in the future. And I have a huge list of companies that I want to research and write about and put them under our radar so I can monitor their news over time. And unfortunately, I can only do about one a week right now. And so I've got a list that's growing. I feel it's more urgent that I cover more and more of these companies because if this wave hits of IPOs in 2026, if the government ever cleans up their act, there's going to be a wave. And even now, there's this wave happening of all these companies that weren't on my radar that are pretty interesting, like Alliance Laundry and Fermi, University of Phoenix, Once Upon a Farm. These are companies with recognizable names that I would typically be interested in covering, but when they all come on at once, I don't have a lot of time to write everything all at once. The three companies I'm going to talk about today on the radar segment, you've heard about them before, but they're important because they are in critical industries. They have a very high degree of retail investor interest, and they've flirted with IPOing or mentioned they're going to IPO. And so they become even more important on our radar because they're kind of inching up the list of upcoming IPOs based on statements by the company, based on reports we get from various reporters that get a scoop. So this first one is Cerebras. Cerebras is one I've probably talked about more than any on the show. They filed confidentially on September 30th, 2024, almost exactly a year ago. I'm recording this on October 2nd, but we got a release from Cerebras on September 30th, 2025, exactly 1 year after they filed for an IPO, which got postponed, and there was government regulation that got in the way of that IPO. Cerebras announced on September 30th that it has raised $1.1 billion, a Series G, at an $8.1 billion valuation. Since Cerebras couldn't go public because of the government intervention that happened in October of last year, it had to raise private funds. It's telling us they've raised private funds and they still want to be a public company, but it had to raise more money. So Cerebras is almost a poster child for what's happening now with the U.S. government stepping in here and causing problems. That's exactly what happened to Cerebras back in October. And instead of IPOing, they had to go through a bit of scrutiny, which was valid. I mean, there was a reason that it needed to be investigated for foreign ownership, and that's what the problem was. But after they were cleared, they paused their IPO ambitions. They must have started raising money early this year, and now they're finally completing it. These things take time. You can't just raise money really fast. You can't just IPO really fast. And so when there's a disruption to it, whether it be a market event or a geopolitical event or a government-induced event, these things take time. It's going to change the trajectory of these companies and their ambitions. So Cerebras, it was led by Fidelity and a company called Altretus. There was participation from Tiger Global, Valor Equity Partners, 1789 Capital, and existing investors Altimeter, Alpha Wave, and Benchmark. So pretty top-tier companies here who are investing in Cerebras. So on the same day, there was an article that came out on TechCrunch. I'm sharing my screen. Rebecca Zutak, I think that's how you say her name. Looks like she had a chance to talk to CEO Andrew Feldman. The company has opened 5 new data centers in 2025 to house its AI hardware in locations including Dallas, Texas, Oklahoma City, Santa Clara, California, among other locales. It's looking into Montreal and Europe. Part of the criticism of the filing that came out on September 30th, 24 was that too much of its business came from one client, and that client was based in Abu Dhabi. It was also an owner, and that's what triggered this Committee on Foreign Investment in the United States investigation, which was subsequently cleared, and there was a delay because of the administration changeover. But what's interesting about this interview is that Feldman told TechCrunch that we chose a small number of leaders who would help us not just in this round, this Series G, but in the future. Talked about getting investments from companies that are leaders in late-stage private fundraising, but predominantly invest publicly. And it says here at the end, and you know it's our aspiration to be a public company. It's interesting that he came back to this phrase, it's our aspiration to be a public company. If you recall, back in April, I think I might have touched on this on the show, or it might have been May, Feldman said something along the lines of, it is our aspiration to IPO in 2025. And that's the point when the light switch flipped for me. When he said it was our aspiration to IPO in 2025, I pretty much knew it wasn't going to happen in 2025. You like to hear a little more confidence coming from the CEO. He still says they want to be a public company, and maybe this funding round cleaned up their books, cleaned up their cap table to get the investors they want to be a part of that IPO and to get out maybe some investors or some employee shares that were just clogging things up or making things messy. It's notable that Fidelity is one of the investors here. And from what I understand, when Fidelity invests in these companies when they're private, it gives them more shares to offer to their clients when the eventual IPO happens. So let's say Fidelity has a couple million shares or something along those lines. They could sell 500,000 of those or 100,000, whatever it is, to their customers because they would have a little more control over the shares and an allocation, having been a part of the pre-IPO funding rounds. So it's good to see Fidelity on this cap table and also some very top tier companies. Cerebras, if you're not familiar, this is a company that makes hardware and chips that are ideal for AI processing. Everyone knows that NVIDIA has a stranglehold on GPUs, but companies like Cerebras, they make bigger chips that can process faster than NVIDIA chips. They can do certain things with inference and other needs with AI processing. They can do it better than what's out there right now. The problem is they haven't scaled up to the manufacturing needs that really needs to happen for them to take market share and to be a big player. But this is a long-term play for hardware. And Cerebras was one of the most exciting IPOs that was coming up last year. Certainly not happening in 2025 now, maybe in 2026, but honestly, I'm not getting the vibes from the CEO that 2026 is the year. We'll see where they stand at the beginning of the year. Maybe we can get a report that gives us a little more knowledge about what the intentions are. But until then, congratulations to Cerebras for raising $1.1 million. I hope it helps you grow so that you can IPO at a higher valuation and continue your growth from there. The next company I want to talk about is Kraken. Kraken is a crypto exchange, maybe a top tier crypto exchange compared to Gemini. It's bigger than Gemini at about a $15 billion valuation, maybe $20 billion at this point. It's actually called Payward Inc., but it's doing business as Kraken. It's up there with Coinbase as a top tier, maybe a second tier crypto exchange. It's also getting into stock trading and it wants to get into tokenization. So it's a company that's growing fast, has a pretty strong user base. An article came out on September 25th from Fortune. It said Kraken quietly closes $500 million round as its unusual CEO pushes toward the IPO finish line. So this article actually had an interview with the CEO of Kraken. And when you put IPO into the name of the article, it's a good sign that the CEO is on board with this. We've known about Kraken's ambition to IPO for a long time. There was an article in March of 2025 that says crypto exchange Kraken is preparing for an IPO in 2026. That was from Bloomberg, and we've kind of known all along that they're aiming for a 2026 IPO. I was talking to one of my sources, and he kind of clued me in that maybe it was going to happen in 2025, that they were pushing pretty fast. But certainly with this government shutdown situation happening, I doubt that's going to happen. It does seem most likely to be 2026. This article talks about the Series C. They raised $500 million at a $15 billion valuation. This came out on September 25th, but just the very next day, September 26th, another article came out, and this is the one that I'm going to focus on more, is that Kraken is in talks with a strategic investor at a $20 billion valuation. So it closed the Series C at $15 billion valuation, and now it's talking about a $200 million raise at a $20 billion valuation. And this article from Bloomberg is careful to point out that this is a strategic investment with a strategic investor, which could be similar to what we just saw with Cerebras. These companies want to partner with certain companies that specialize in late stage investments in pre-IPO companies and then stick with them into the IPO. Someone like a Fidelity could play this role again, where they're providing this capital and then providing IPO access to their customers. Maybe that's what's happening here. Maybe they're cleaning up their books some more, bringing in one of these strategic investors who wants to be a long-term public shareholder. So that's what it seems like. Kind of funny how they closed this $500 million round, and then next thing we know, the very next day, we get an article about a $200 to $300 million commitment from a strategic investor. Of course, they won't tell us who it is, but from everything I'm hearing, from what I'm seeing with the government shutdown, I think we can be pretty certain that Kraken is not happening in 2025, and it is a 2026 deal, and hopefully a Q1 2026 deal, as long as this government situation can get cleaned up. This is one that we can get very excited about. Last year, we were excited about Circle headed into the new year. This year, Kraken is definitely on our top list of 5 or so companies that we really want to see public, and it could excite the crypto enthusiasts more so than Gemini, maybe more along the lines of a Circle or Coinbase. Going back to this Fortune article, it is a pretty interesting read. They had access to this CEO. His name's Arjun Sethi. It talks about some of the turnover that happened with management at the top of the company, and that led to the delay, which ultimately led them plan to IPO in 2026. Versus 2025. But it seems like this company is really moving forward. And if you read this Fortune article, you'll get a lot of that sense. Of course, it's the author really pushing the narrative of IPO, and the management did not really comment on the IPO, and they usually don't. But I do recommend this Fortune article because it gives you a sense of how the company thinks about the IPO and that it's not a straight shot, and any disruption can really throw things off. In this article, they talk about management changes being a disruption. And then, of course, you have this broader IPO window that is open, and you thought it was just an open net and you could just get your IPO out the door. But now with this government shutdown uncertainty into the mix, you got to wonder what these companies are thinking, these private companies who have ambitions to become public. Kraken, certainly one we'll be watching early next year. Last one I want to talk about today is Fervo Energy. This is a company I've touched on in the past. It's a geothermal energy company. It's got some big contracts in Utah with Google and possibly some other hyperscalers to provide clean energy to data centers. We saw the Fermi IPO this week, and Fermi is all about providing energy to the AI infrastructure to energize the compute for these massive data centers that are going to need a lot of energy. It plans to do it with solar and natural gas and nuclear as the clean energy source, as the base clean energy source. Fervo Energy is the company that's doing it geothermal and is doing it at scale. Scoop came from Axios Pro that Fervo Energy is raising $300 million in a Series E funding round. This is interesting because Fervo Energy raised $255 million in December 2024. It secured another $206 million in new financing to accelerate this Cape Station development. This is the Utah project. That came out June 11th, this announcement. And now they're raising another $300 million according to Axios. Now, I've been following this company longer than just this year. And I like these companies that provide a unique solution to a pretty big problem. And energy creation is certainly an important factor, as we've already learned from Fermi and from other stories, that there's not enough energy to fuel this AI revolution. And the energy ideally will be clean instead of burning coal. And geothermal is one of those potential sources. And so as this company builds out its prototype, it's not really even a prototype, it's a huge plant where they're going to be generating energy. If that's successful, then it's replicable. Fervo really perked up on my radar when we got a story in March 13th of this year, that Fervo Energy is moving toward an IPO. There was an article from Axios. I think they broke the story again. There was also an article from TechCrunch. It says here, Fervo Energy is reportedly eyeing an initial public offering in the next 2 years. They expect energy usage to double in the next 5 years or so. There's a huge hunger to solve the demand story. Now, there's some qualifications, like we're moving toward an IPO, or, the IPO is not imminent, but we're moving in that direction. There's always that kind of language. And this $300 million kind of feels like another one of these final raises before going public. Just like the last two stories. These are stories about companies that are raising at a very late stage of their private existence, raising money from strategic investors to maybe clear out some of the riffraff or some of the SPVs or whatever's on the cap table, bringing in strategic investors who can help take them from private to public, and maybe have a specialty in public trading of IPOs. And there are companies with specialties in all of these trades of finance that we don't really know about as retail investors, but it sounds like they maybe are bringing on some strategic investors as well, which is the theme of this IPO Radar segment today. Late stage companies raising another final round before they go public, bringing on strategic investors. So solid reporting from Axios on this, and it's one that I would love to see public. We're not getting a lot of climate-related companies going public. We're seeing maybe some AI companies starting to go public. A lot of fintechs are going public right now, certainly crypto fintechs, and that seems to be the theme. But climate-related companies, battery startups just haven't been all that active going public. Maybe Fervo Energy can kickstart the next wave of climate and energy IPOs that we hope to see in 2026. This one could happen in the first half. It could take all year. It may not happen at all. But either way, we're going to be following its story because we want to see it public, just like we want to see all of these startups on the radar list go public. That's all for the show today. If you like what you're watching, go ahead and hit that subscribe button, follow on YouTube, give it a thumbs up, follow, subscribe, whatever it takes on Spotify or wherever you consume your podcasts. And for those of you who are interested in taking a deeper look into a lot of these IPOs and the pre-IPO markets, join us on our Patreon group at patreon.com/accessipgoes. Yeah, we're very active when these IPOs are happening. We have chat rooms. People are sharing their allocations for the various deals that are coming up. People are sharing their opinions like, hey man, should I invest in this upcoming IPO or not? But I also highlight pre-IPO valuations and deals that come through my radar. I monitor several pre-IPO secondary marketplaces for all of the companies on my radar list and where they're trading in the secondary marketplaces. What I'm looking for is discounts to fair value and growth from the previous funding rounds. And so when I see any trends with various companies that I follow related to pricing or related to availability, a lot of times you don't see these private companies become available on any platforms. And when they do, some of the very highly sought after companies that are hard to invest in, our community likes to know. And if they're growing, then you can own them in an earlier stage of their life cycle. I like to say you can own tomorrow's IPOs today by investing in secondaries. There's a whole new level of risks that investors need to think about, and not everybody's qualified to invest pre-IPO, but it's certainly something we talk about on our Patreon. So if you want to take your investing to the next level, join us there. It's only $5 to join, and you get a 7-day free trial. So you're welcome to come join us for 7 days and check it out. And if you don't think you're going to get that value out of what you put into it, that's fine. But most of our members who join, they like to stick around because they're getting these insights that they're not finding on the Wild West of social media, either LinkedIn or Twitter. This is behind a paywall. It's behind a privacy wall. So if you're looking to up your game, join us there on Patreon. That's all for the show. Thanks for listening. Thanks for watching, and I will see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.